Hello and welcome to Business Today Television. I'm Karishma Sudani and joining me is Secretary DIPAM, who is Mr. Arunish Chawla. So thank you very much for joining us on the India Today group. It's been a pleasure speaking with you, and this is your first interview to us on BTTV India Today group since you have taken over this position and leading the department of disinvestment and public asset management. I'd like to begin by asking you, currently the market sentiments are quite volatile with a lot happening globally, the geopolitical situation. Does this challenge the current DIPAM strategy?
You know, market has very smart people. They always look forward, and they have already solved for the geopolitical problems. The markets have recovered. So, and as far as we are concerned, we adopt a composite strategy. We have our own in-house research teams. We have a DIPAM model to guide our work, and we follow a composite strategy. So, while geopolitical developments worry people, we look through it and look far forward.
Look through it, but look far forward. So, are you reiterating the fact that everything that the department does will be in line with the market sentiments?
Yes, and also beyond it. It's Honorable Prime Minister's and Finance Minister's vision that we must share the value of our public enterprises with the ordinary investors, with common households, with senior citizens, and now even housewives have become investors. And as part of that strategy, we follow a composite strategy, which essentially means we monitor corporate performance of public enterprises. We manage public stocks. We are the asset managers for public stocks. And it is not a small kitty. It is, today the market cap of public stocks is almost 50 to 60 lakh crores. And they now are, 10 to 15% of our entire stock market. And our stock market is huge. It crossed the 5 trillion barrier only recently. It's now the 4th largest in the world and will soon be the 3rd largest. We also ensure that fair dividends are paid by public enterprises. We want our public enterprises to be role models on the stock market. And we also do offer for sales, market sales, minority stake sales. And we do it in small tranches because we tend to look for and share the wealth with the small investors.
Fair enough. So while you were speaking, you did talk about the value creation part of it, and I want to come on the DIPAM model, something that you have been working on. And of course, we all know that disinvestment is quite a challenge and currently one of the most challenging tasks, and in terms of contribution also to the revenue of the country. And when the budget is prepared, big high hopes always on dividends and disinvestment. Tell me a bit about the DIPAM model.
Right. The DIPAM model is a policy model. It's not a market model. And it rests on 4 pillars. It links corporate performance with dividend policy. The second part of the model links dividend policy with market prices. The third part resolves the trade-off, which helps us decide what to sell, what to hold. And the fourth block in the model helps us time it correctly to market conditions, where we follow the market benchmarks and our teams do the market research. And that is how we go about implementing this composite strategy. And, like any optimization model, the strategy evolves with time. So with different market conditions, we do different things. That's the bottom line.
Got it. And is it different from the disinvestment strategy in particular?
Yes. As you know, we have done away with fixed disinvestment targets because our job is to manage assets and not obsessions. That's what we often say. And that is why we are now called the Department of Investment and Asset Management. And the reason is that we do not pursue disinvestment like an obsession. We pursue a strategy where we look at what is strategic, where public sector needs to be present, and what is the space where greater private sector participation is desirable. And as you know, in general equilibrium, when we close public enterprises in the non-strategic space or market competitive space, or we disinvest, they both lead to greater private sector participation.
Doing away with the disinvestment target, has it helped you consciously focus more on the value creation model than the revenue seeking?
Absolutely, because we don't sell anything in distress. Whenever we sell an asset, we sell it as part of a value creation strategy. Whenever we close an enterprise, we close it for performance right reasons, creating greater space for the private sector. Whenever we disinvest strategically, we do it with a larger economic national objective. That's the difference.
Got it. But does it somewhere bother you or challenge you on the low revenue receipts coming in from disinvestment, and probably the fact that you must be banking more on dividends because now your focus is also there, while that has all been your strength for a while now?
See, we must appreciate that all three are important. Asset sale through all the different mechanisms, including offer for sale, follow-on public offer, initial public offering, minority stake sales, qualified institutional placements, as well as strategic disinvestments. We also focus on fair dividends. That's a very important part of our strategy, and very important part of sharing of the wealth of public enterprises with people, with the people of India. As part of that strategy, we monitor the dividend payouts of public enterprises very strictly. And we ensure that at least 30% or 4% of net worth or reserves are shared with the common investors, small investors. And whenever reserves accumulate beyond a limit, we issue bonus shares, we do buybacks, and so on and so forth. DIPAM research has shown that on an average, or you can say in terms of weighted average, the public enterprises distribute 10% more dividend than the Nifty 50 companies. And that makes them a very, very attractive investment, because if we hold a good dividend paying stock in our portfolio as part of a growth strategy, even if the markets go down because of the macro shock, our income is hedged. So in a way, public sector stocks are the best hedge for any investor's portfolio.
Public sector stocks, and this is what you have also been talking for a while now. I want to get back, sir, to the point of dividends. For FY26, if you have a tentative number also in mind, do you foresee it being better than FY25 and also beyond what you're estimating as per the budget numbers?
Absolutely. we expect we distributed the highest ever dividends by public enterprises last year, and this year, we are even our target is even higher. We are more ambitious, and we will try to ensure that we not only carry on this record, but we further better it this year, so that investors are all happy.
Okay, further better it this year. We did talk a lot about dividends from public sector enterprises, but in the past you have shared that there needs to be a fair share of push from to the private corporations in order to give fair dividends to their investors. Is the department doing something to nudge them to be able to ensure that things are right?
See, it is just moral suasion. We don't plan to take any coercive steps or force any regulation, but market research shows, and the literature, it's well documented, that anywhere between 30 to 40% is a fair share of dividends, because dividends belong to the investor and reserves belong to the promoter. So there has to be a trade-off between, the business plans and the sharing of legitimate profits with the investors. And as part of that strategy, our in-house research or DIPAM research shows that the public stocks, both first and second orders, stochastically dominate the Nifty 50. And it is making a difference when we go and interact with the market investors, funds, hedge funds, mutual funds, or research houses. That's a point we make. And I guess, as people become more aware and their expectations rise, everyone will have to respond to it.
Great. Like you said, not obsession, but tell me, what are the big ticket sales that is a part of your pipeline for FY26 on the disinvestment front?
We came out with an OFS offer at the beginning of April. The market conditions are now good again, and we will be coming out with OFS of public stocks regularly during the course of the year. And we will do it in small tranches. And the idea is, that we give greater opportunity to retailers and small investors. And that's also Honorable Finance Minister's direction, that we do it as part of a calibrated and continuous strategy. And that is what we are going to do. So what happens is, when we come out with OFS, because of the regulations, the institutional investors tend to move faster, and the time is short. So this year, we'll always keep some green shoe option with us, so that individual investors and small investors get a fair share of the pie. We are sensitive to their needs, and through your channel, we would like to give forward guidance to small investors, that be on the lookout. At DIPAM Official, we always give market announcements to the market, and as and when the public stocks come for sale, they are in limited supply. Please be ready and make them part of your portfolio. And we'll also ensure that ordinary investors, small investors, individual investors get a fair share of this pie.
Okay. A lot of OFS planned in this year. What about LIC FPO? I know you have an extended timeline on that, but keeping in mind how the market sentiments are moving, the current global tensions rising across, not just cross-border, but across with the different stronger nations that we have, does it challenge your plan?
As I said, we have a very competent research teams. We monitor markets on daily basis, and it is government's commitment that LIC, should be listed, and its portfolio and its stock should be shared with investors. We've already done 3.5% of disinvestment, and we would like to do more so that there is sufficient float in the market, and you will hear the good news soon.
Soon. How soon? Is that this year? Too early to predict.
No market participant, shows all his cards. So wait for the moment.
Okay, let me address the elephant in the room. It has to be IDBI. One, is the process on track? And two, what is the current stage of the stake sale?
The process is on track, and we are working hard to implement the government's announcement, which is strategic disinvestment of 30% of GOI stake and 30% of LIC stake in IDBI. We are working together as a team. It's a multi-stage, multi-layered process, and both data room, data sharing, answering of queries, drafting the shareholders agreement, and legal and transaction advisors. Everyone is working in tandem to take it forward.
Okay. Besides this, in terms of the big ticket reforms and other such that is coming throughout the year, that also is a part of your pipeline, right?
Absolutely.
Okay. One quick question, and this has to be on the road shows that you're expecting this year. Besides IDBI, do you plan to hold any other international road shows? You've been in touch, also nationally.
We will be focusing more on the domestic market because, now we have reached a stage where we don't have to go out all over the world. Everyone is looking at us. The FIIs are back again. The interest in Indian economy, Indian stocks, and our stock markets they're back in action. We will be doing a few road shows. We will also be giving timely information to the markets, and as I said, Honorable Finance Minister has given us clear targets and clear goals, and as part of that strategy, we will be organized, we will be predictable, we will be continuous, and we will continue to come with good offers and make everyone happy.
Okay. For the last few years of the current government, we have been listening to the quote. I'd like to actually repeat it. It says that government should not be in the business of doing business, and that's how the importance of disinvestment also rose in the power corridors. Now, the second challenge, while the first challenge has been something that you're already working on implementing, the second challenge is what to do with the loss-making entities. Do you have a plan? How are the loss-making entities looking like? What is the kind of number of entities? Is there a chance to let private players come in, take them, or to just head for a closure?
Let me explain this. The new public sector policy that you're talking about identifies a few sectors as strategic, where government's presence through its enterprises is essential. These could be natural resources, critical minerals. This could be energy and transport, the core infrastructure. This could be the financial backbone of the country, and of course, defense, and the industries linked to defense. There are many sectors where private sector is come of age, and it is rising fast, where we need to make greater space for the private sector. So in all those spaces, we have reviewed the public enterprises quite intensively. There is a mechanism within the government which is interministerial, and on that basis, there are certain enterprises which have been identified for closure. There are certain enterprises identified for strategic disinvestment, and there are certain enterprises which are identified for consolidation along the value chains. All the three strategies enable greater private participation, and all three energize the economy. So that is the point to understand, and which is why we are not called the Department of Disinvestment now. We are called the DIPAM, which is Department of Investment and Asset Management.
Fair enough. So as we come to the end of this interview, I have a quick last question for you, and this is more on the fiscal math. There could be a chance that by the end of the year, with the whole geopolitical situation, our previous budget numbers could make a change. Are you? Is there any expectations from you on any kind of upward revision from what has been allotted for disinvestment and dividends under the miscellaneous capital revenue?
Yes. We achieved our targets in the closing financial year, and this year we have pitched higher. We are after all the public enterprises to improve and enhance performance, and we do the same on ourselves, and we impose the same rules on ourselves. We will try to achieve both higher dividends and higher asset sales this year.
Okay. Thank you very much, sir, for speaking with us. It was quite a pleasure talking to you, and we wish you all the luck with the big challenging year that this is going to be.
Thank you very much.
If you like the video, do like, comment, share and subscribe.